Hi, this is a short video and it's more of an educational video on technical analysis. Now, this is how I use technical analysis when I produce trade ideas. I'm not going to produce a trade idea today. It's more of the levels, indicators, formations that I look at on a daily basis. Now, this is Bitcoin. This is not as a mature market as we look at. We normally look at the foreign exchange, stock indices, commodities, which have been around for years. Bitcoin's quite a new kid on the block, although there is plenty of technical movement charts that we can look at and produce trade ideas on it. It's something we're contemplating, and there's quite a demand for it, but we haven't made that move yet. But anyway, I produced a trade idea on IG community a couple of weeks ago. I'll review how that played out, and then, as I say, I'll give you a bit of an insight into what I look at when I start to analyze a market for a trade idea. So Bitcoin, this is a monthly chart, longer term chart. Start there. We've had this explosive rally higher. Prices rejected the 20,000 area and moved sharply lower before the end of the month. Now, this would normally, when a candle opens lower, closes higher, it's normally a bullish candle, but because of this big rejection, this is posted as a shooting star candle. Now, a shooting star candle will require confirmation. So this was confirmed the following month with a bearish inside candle. This is when price action opens within the previous body of the previous candle and closes inside the body of the previous candle as well. Also, you had this big tail, another rejection. So it's very similar to the shooting star candle, although not quite. So this has all been confirmed with a break of the 50% at 50% Fibonacci retracement level and psychological 10,000 level, and prices have moved aggressively lower in the last few days. So the daily chart, and this is similar to the one I produced for the trade idea, which I published. And now the scenario we were looking at then was this 10,000 level, and I had two scenarios, a bullish and a bearish scenario. The bullish scenario was to set longs at 8,500 and 6,000. The stop on that was 4,500. Price action didn't get down to the 8,500 level, but rallied higher. Now, the bearish scenario was to sell at 12,500 and 14,000 with a stop at 15,500. The target for this trade was 8,500. So we traded up to 13,000. So the first part of that sell order got triggered, 12,500. Second part didn't, and prices came off, moved sideways, and then over the last few days have moved down towards the first target. So that's selling at 12,500, taking profit at 8,500. So that's worked quite nicely from that perspective. So that's that trade idea out the way. Forget about that. This is a bearish channel we're in on a daily chart. So price action is moving lower. The bearish channel requires a break, and a clear break of this 13,500 area. The previous high at 13,000 would be the first sign that we're going to attempt that over the coming days or weeks. But at this point in time, we're moving lower. Now, this downward trending support line, price action is trading there today. This is quite key, and it's something which, again, could come into the fray a little bit later on if prices do rally higher. But at this point in time, we're looking at prices continue to move lower. We've got a 78.6% fib retracement level, which is a common retracement level. That's at 6,600. Now, the next level after that is 5,400, which was this low, so a horizontal level, and below that we've got a level just above, just under 3,000. So if I look at this, again, this was the ABCD correction we were expecting. So that's playing out quite nicely. You've got the 78.6 fib support. You've also got this downward trending support and volume increasing as well. So there are small support areas around here. This would have led to a tentative buy signal previously. But as I say, this is more educational. We're not looking at that. We're looking at the levels to watch out. So we'll watch if we get a break above 13,800 today and a close above there, then this would have broken the falling wedge formation, and that would be a bullish signal. Otherwise, price action is looking to move lower. There's nothing really standing in its way. We could also add another trend line from the peaks here and there, and also say that this level around 10,960 would be a price to be concerned about. If a market rallies to there, we'll expect sellers to come in again. So the 4-hour chart again shows the falling wedge formation a little bit more clearly. That's what we look out for. Again, if we do get a break above this 13,000 to 14,000 level and close above there, that could signal an extension higher over the more longer term.